Most veterans are told two things that simply aren't true. The first is that their credit score isn't high enough to qualify for a VA loan, and second is that they can only use their VA benefits once. The reality is that many veterans could still buy a home right now or even buy again and don't realize it. Today, I want to explain VA loans in plain English. We're going to talk about the credit scores lenders really look at, how VA eligibility actually works, and when a veteran may be able to have more than one VA loan. Hey everyone, this is John Warner with Mortgage and Credit Pro. I work with veterans across Arizona, Oregon, and Washington, helping them understand their home financing options and avoid costly mistakes. When buying a home, let's start with credit scores, because this is where most confusion begins. Many veterans believe the VA requires excellent credit, but the Department of Veterans Affairs does not set minimum credit score requirements. What happens instead, the individual lender creates their own approval guidelines. In many real situations today, veterans are qualifying somewhere around the upper 500s to low 600s, depending on income, debt, and payment history. The credit score matters, but isn't the only piece of the picture. Consistent payment, stable employment, and manageable debt often carries just as much weight as the credit score itself. I regularly talk to veterans who assume that they need years to improve their credit, when in reality, they already are much closer to qualifying than they think. Sometimes the biggest obstacle isn't credit, it's misinformation. Now let's talk about something that surprises almost every veteran I meet. A VA loan is not a one-time benefit. You can actually use your VA benefits multiple times throughout your life. One common situation that happens when a veteran sells their home and the VA loan is paid off, once that happens, entitlement can usually be reinstored, allowing the veteran to use the benefits again, just as before, often with no down payment. Another situation happens when life changes. Maybe a veteran receives new orders, relocates for work, or simply outgrows their current home. Depending on how much entitlement remains, it may still be possible to purchase another primary residence while keeping the existing property. This is very common with military relocations. Service members that move out of the area keep their previous home as a rental and purchase again using VA financing. Many people are surprised to learn this is allowed when structured correctly. Now it's important to understand that VA loans are intended for primary residence. The expectation is that they plan to live in their home. Every veteran's entitlement situation is slightly different, which is why assumptions can sometimes prevent people from exploring options they actually have available. The biggest mistake I see veterans make is assuming they no longer qualify because they're used benefits before or because someone told them their credit score was too low. If you're a veteran wondering whether you still have eligibility, what credit score might work in your situation, or whether you can buy again, the best step is to simply set up some time with me so we can review your options together. And if you want straightforward explanations about home loans, credit, and buying strategies. If this video helped you, hit that like button, subscribe for more simple mortgage guidance, and share it with someone who has questions about any type of mortgage. I'm John Warner with Mortgage and Credit Pro, and I'll see you in the next video.